Welcome back. The UAE's financial markets are closed today. Trading will resume on Sunday. So now let's take a look at the various currencies, followed by the price of oil and commodities. And in our top business story, Republican presidential candidates blamed US President Barack Obama on Friday for the downgrading of the US credit rating by Standard & Poor's in an unprecedented reversal of fortune for the world's largest economy. S&P cut the long-term US credit rating by one notch to AA+ on concerns about the government's budget deficits and rising debt burden. The move is likely to raise borrowing costs eventually for the American government, companies and consumers. On August the 2nd, Obama signed legislation designed to reduce the fiscal deficit by $2.1 trillion over 10 years. But it was short of the $4 trillion in savings S&P had called for as a good down payment on fixing America's finances. Bitter political battles remain over fraught issues of spending cuts and tax reform.
I think this is a very sober warning. We're still the wealthiest country in the world. We still have the most natural resources of any country. We have the most energy of any country. But the fact that this downgrading has occurred should be very sober and should remind us that there's much, much more to be done than has been done in the last few weeks. And I think the Congress's first job and the President's first job is to focus on the economy, because unless we start growing again and start employing people again, we can't solve these problems.
And Wall Street saw another day of wild twists to end the session mixed. But, however, it was the worst week in more than 2 years. It was another whipsaw trading day on Wall Street as investors couldn't decide whether to worry less about the economy or worry more about the European debt crisis, or fret over the $2.5 trillion in market value wiped out of global markets this week. But word out of Europe helped to restore investor confidence as the Italian Prime Minister Silvio Berlusconi agreed to speed up austerity measures and social reforms. Signs of a pickup in job creation also helped investor sentiment. For the week, the Dow lost 5.8% and the Nasdaq lost 8.1%.
The message is that there is a great deal of confusion about the degree of impact that recent events, including the debt ceiling debate that we saw conclude on Tuesday, and what's happening in Europe, is going to have on future economic growth.
In a bid to stop the European debt crisis from further punishing Italy, the Italian Prime Minister has agreed to speed up cost controls. Silvio Berlusconi has been under pressure by European leaders to address market concerns that pushed Italian debt yields sharply higher and helped fuel a global stock market swoon that wiped away $2.5 trillion in market value this week. In return, the European Central Bank will help with financing, and Spain is also said to be getting some help. The agreement comes as world leaders call for a coordinated effort to stop the crisis from further damaging the world's economy. Berlusconi hopes his decision will relieve pressure from the markets and from his EU counterparts.
We must recognize that the world has entered a financial crisis that hits every country, a global crisis that adds itself to all the existing crises, and that does not respect at all the economic reality and the economic fundamentals. Therefore, the situation in the financial markets is very difficult and demands coordinated intervention from the various states, especially those that have the euro as their currency.
Gold, silver and Swiss francs are well-known alternatives for investors when markets are in turmoil, but now diamonds could be joining the list. With mines in short supply and rising demand in emerging economies like India and China, the diamond scene is set for a spike in prices. This may be bad news for consumers, but for a new fund based in Hong Kong, it could be a lucrative money spinner. While 1 ounce of gold is priced as 1 ounce of gold, for diamonds the value is in the eye of the beholder.
Rare diamonds are actually a superior safe haven in gold. So you see during the global financial crisis, while gold fell in excess of 30%, diamond market generally fell less than 20, and rare diamonds fell less than 10. In some cases, the very rare diamonds, multi-million-dollar diamonds, barely fell at all.
Even if you're buying into a fund where in theory you have a much broader spectrum of, or exposure to a much broader spectrum of diamonds, how you value the assets of that fund is something that is extremely difficult. So you can take 5 different diamantaires, show them one diamond, and they'll give you 5 different valuations for it. And the range can be extremely broad.
And up next, we have the day's sports news, so stay with us.